Welcome to our YouTube channel, Info about Forex.
In this market update, we cover the latest developments in Wall Street, Asian stocks, and the oil market. Wall Street saw its decline continue for the second consecutive day, with the DJIA down 0.54%, S&P 500 down 0.70%, and Nasdaq down 1.17%. Growth sectors faced the brunt of the sell-off, as investors de-risk in anticipation of the upcoming U.S. Consumer Price Index, CPI, release. Over the past week, the Nasdaq declined by 1.2% compared to the S&P 500 second's 0.6%. Treasury yields showed mixed movement, with the 2-year yields rising by 5 basis points BP, while the 10-year yield settled close to 4% following its latest issuance. As the U.S. earnings season winds down, all eyes are on the upcoming U.S. CPI data. This data holds the potential to influence the trend over the coming weeks and plays a pivotal role in determining the need for a September rate hike. According to the latest consensus, headline inflation is expected to rise to 3.3% from the previous 3%, while the core aspect might remain unchanged at 4.8%. This impending rise in headline inflation will be the first since August 2022, with decreasing base effects expected in the upcoming months. On a month-on-month basis, both headline and core inflation are projected to increase by 0.2%. While policymakers may require further data to shift their tightening views, any hawkish sentiment arising from an unexpected inflation surge could bolster the U.S. dollar in the short term and impact risk sentiments. The U.S. dollar has recently gained strength, rising by 0.5% since the beginning of the week. However, it's important to monitor its weekly relative strength index, RSI, which has been unable to breach the key 50 level since November of the previous year. Failure to surpass this level could indicate that the current rebound is corrective within the broader downward trend. On the upside, a resistance level to watch is set at 103.12.
As we move into the Asian session, markets appear poised for a subdued start. At the time of writing, the Nikkei is down by 0.13%, ASX by 0.06%, and Kospi by 0.55%. Sentiments continue to be impacted by China's deflationary narrative, reinforcing a prolonged low-growth outlook. The recent U.S. restrictions on certain tech investments in China have provided little relief to these sentiments. Despite this, the downside in Chinese equities seems contained, with market participants adapting to weak economic data from China. Attention remains focused on the possibility of a turnaround. On the weekly chart, the Seng Index continues to grapple with the Ichimoku cloud resistance, with the index briefly surpassing the psychological 20,000 level, but lacking sustained momentum. The weekly RSI hovering around 50 suggests broader indecision. Immediate support lies at the 18,460 level, while the key resistance remains the 20,000 level. Turning our attention to the oil market, Brent crude prices have shown resilience despite weak economic indicators from China. Focus remains on Saudi Arabia and Russia's supply cuts, along with geopolitical tensions in the Black Sea, as bullish drivers. Moderate cooling of economic conditions elsewhere continues to support demand. Having surged 15.7% since July, Brent crude prices are aiming to retest the year-to-date high of approximately $88.40. After trading within a wide consolidation pattern since November of the prior year, the $88.40 level also serves as the upper bound of the range. A break above this level could potentially pave the way for a retest of the $98.00 level. Notably, the weekly relative strength index, RSI, has crossed above the crucial 50 level for the first time since July 2022, suggesting the possibility of a trend reversal to the upside.
Stay informed with these critical market insights as we navigate the ongoing developments in the financial landscape.